Good morning to all of you, and welcome to the IBSL distance learning system, and also welcome to the subject of central banking. Starting from now on, I am going to be the lecturer in this subject, central banking. It's a diploma level course. The code number is D09, and after I start and continue, there may be some other lecturers also joining this series to discuss about special topics of their expertise for you to understand it better. And most of the time, the central bank, they will be the officers who are working in the central bank. I'm also a central bank, but I am retired. Okay, leaving it for later discussions, let's talk a little bit about central banking. Before I go to the syllabus and start talking details of the topics under the syllabus, I want you to have an idea about what central banking is, because central bank is an institution that is always with us, whether we follow courses or not. Even the average people, average laymen, know, have not exactly, but have some sense, some feeling about central bank. I have asked this question from many students in the past when I deliver lectures on central banking or money. They have indicated when we talk about the central banking, they remember something like this, something like this. So this is with us all the time. Always we live with these type of things. What are these? These are we call money. By now you may have studied about survey of financial systems, under which you have studied money in detail. So I'm not going to touch that subject here. Already you know it. But I'm going to talk about the relationship between this, us, and the central bank. When we go out of home, either to school or to office or for any other work, usually we check whether we have taken the pocket. Why? Whether we have taken something like this. Why? Because this enables us, these type of instruments enables us to feel comfortable that wherever we have to buy a good or a service. Now, if we are traveling by bus, we are buying a service. If we go to a hotel and eat something, we are buying a good and service. So for all those are possible if we have these. Then we can say we need these for our day-to-day activities. And also this is accepted by everybody in Sri Lanka to exchange goods and services. And the institution, or we can say the power, the authority behind this is central bank. Then from very poor people to very wealthy people, from uneducated people to educated people, from very young people to elderly one, whoever we take, and wherever we go, we can see these things. You can see the presence of money everywhere. Then the central bank is also everywhere. This is the average understanding, layman's understanding, but we are going to discuss a little bit more about central banking under this course. Now we can, you must have by now, I hope you have received 3 text notes by now about different topics. This is the first series of presentation. If you have read those notes by now, it will be very easy for you to understand, grasp what we are going to talk about these, because presentations and those notes are complementary. Simply because we present this one, you can't say, okay, I have the presentation. There is no need for me to read the notes. Like, no, they should be complementary. In presentations, we may not be able to discuss each and everything. That's why we give set of notes. So I request you to read those notes and be familiar. It will be always more useful if you read the notes in advance before the class and then come prepared. That's the whole reason that we are sending them a little bit in advance to the class. Okay, now let's look at our slide presentation. There we have okay. You must be seeing this one. I have prepared this note. This is the initial introductory note, introductory presentation. So I have put main areas. These are the main areas of this subject that we will be discussing. Of course, there will be some other topics also in between. So whenever they are relevant, we will discuss them in detail. But we are not going to stick to completely to this screen, this slide. It will gradually evolve over time. Let's look at the main topics. The first one is a brief introduction to central banking. We are trying to understand, we have already got some sense of what central banking is, but we are going to go to the details. Then the origin of central banking and its evolution. Central banks were evolved, central banks were started some long ago, and also over time, they have evolved. The central banks today are not the same central bank they were at the origin. Therefore, gradually they have evolved. Those things also we will discuss. Already we have given you a note on this. Better to read that as well. The responsibilities of a central bank. As we know, central bank is an institution that the society has created to facilitate its activities. Then the society also has given responsibilities for the central bank to perform. Central bank is entrusted with those responsibilities to ensure that expected service of the central bank is received by the members of the society. And to discharge those responsibilities, central bank performs certain functions. Therefore, we are going to discuss about functions of a central bank. I have put functions of a central bank, and there are responsibilities of a central bank. That means those are fundamentals, because when we take a central bank either in Sri Lanka or any other country, the fundamentals of central banking is the same. But of course, depending on the country and that country's plans and also the policies, central banks could have some other responsibilities as well in addition to the core central banking functions. That's why I'm going to touch a common ones first and then go to the Central Bank of Sri Lanka per se, because that is the most relevant institution for us. That's why I have put responsibilities of a central bank, functions of a central bank. Now, if we go to fifth one, there we can see legal provisions for operations of Central Bank of Sri Lanka. Now there we have shifted from a central bank to the Central Bank of Sri Lanka. Why? Because the most relevant central bank for us is the Central Bank of Sri Lanka, because we are living in Sri Lankan monetary system. In Sri Lankan monetary system, the monetary authority is Central Bank of Sri Lanka. Therefore, we should know more about Central Bank of Sri Lanka than about other central banks. And why are we going to talk about legal provisions for operation of Central Bank of Sri Lanka? Because when the society established the central bank was not given the authority to work as it wishes. Because central bank is managed a set of people, which is known monetary board, that we are going to discuss later. The monetary board members of the monetary board cannot manage the central bank and its function the way that they wish. There are legal provisions. So within that legal framework only, the monetary board and its members can take decisions and implement them. So there are legal provisions. There are legal provisions for this core functions of the central bank also, and also there are some other functions. To perform those functions also, central bank has to follow legal provisions enacted in the parliament. Then we will discuss about the operational structure of central bank. The central bank, there are a large number of operations performed by the central bank. We are trying to understand, we will understand how these operations are structured and what the relationships among them are. Those things we can discuss. And also, if you want to study other central banks, also you can compare the structure of the Central Bank of Sri Lanka with structure of some other central bank. There you can see the similarities and differences if you want to go to the details. Then after that, operations of central bank. And because central bank, this operational structure is just the framework. Operations are within that framework, within that structure, central bank perform many operations. Those things will be discussed under 7. Then the 8th one is impact of central bank operations in the economy. In the economy should be in the economy. And we know central bank is one of the key institutions in managing the economy, and it is the only authority in managing money and the monetary system. Money is everywhere. So whenever central bank take decisions and implement policies, they have big impact on the economy. And that impact can be direct and indirect depending on the link people have in the system. Then there is another topic which has been discussed for a long period. Still, the debate is going on whether central bank should be independent or not, and what the degree of independence the central bank should have. Why are we talking about central bank independence? Central bank is a government institution. The government in power take decisions to appoint officers, central bank governor, and also central bank has a very link between the government. It's owned by the government. Then from time to time, the government can, depending on the nature of the people who are managing the government, there can be different degrees of interference by the political authority in the central bank operations. Why only central bank independence we talk? Because central bank, as we have already discussed and also know from our practice, central bank produces something very special which nobody can do. That is producing, distributing, and managing money. Money, sometimes we say money can do anything, like, because if you have money, you have the purchasing power. Then you have the purchasing power, you can have a bigger impact, higher authority, and on economic activities. Therefore, but we know money is not something that you can directly use either for consumption or production. It is simply a facilitating instrument. And sometimes, depending on the philosophy or I can say discipline of the people in the governments, they can influence the central bank to print more money and support the government popular projects. Sometimes, depending on the authority central bank, they can say, no, we can't do it, because if we do that, these will be the short-term, medium-term, and long-term repercussions on the economy, which is not going to be good for the social welfare. Therefore, central bank independence is talked. To what extent central bank should comply with the request and of the government, to what extent they can predict. Therefore, central bank independence is a very hot topic, which has been in discussion for a long period. Still, debate is continuing. It will continue to be discussed in the future as well. Then the 10th topic is about leading central banks in the world. When we take Central Bank of Sri Lanka, the authority of Central Bank of Sri Lanka is within the Sri Lankan economy, within the Sri Lankan monetary system. But in an integrated world, we have relationships, interdependence of central banks among other central banks. And also, if we take Sri Lanka is a very, very open economy. And in terms of trade as well as the using financial services and payment systems, central bank is always linked to the rest of the world. Therefore, if a particular country is economically powerful, take for example USA and this Japan, German, European Union to some extent, and UK. So those countries are more powerful. China, these days China is emerging very powerfully. So their policies impact, their domestic policies impact international economy and the financial system. Then we should be familiar with what they are doing from time to time and what their impact will be on us. That can always be seen. Later on, we will discuss those things in detail. Therefore, we have to understand what the leading central banks in the world are and how they change their policies from time to time and what is the impact those policies will have on us, whether the Central Bank of Sri Lanka is taking some measures in reaction to those things, in response to those changes, if they are going to affect their policies and also overall economic performance to mitigate negative impacts and to enhance positive impacts. Central Bank of Sri Lanka also could be changing its policies from time to time. Therefore, that topic is also important. The last topic, that most probably will be the last lecture in this series, contemporary trends and issues related to central banking. As we discussed at the very beginning, central bank was started long ago. It was in the 17th century, and the information is with you in the note that we have given. During this long period, central banks have evolved continuously. Therefore, even now, central banks are changing. So we should know what the trends are in those changes, and also what are the issues. Because a central bank operations can't change just by itself. Central bank operations, policies, and the way it performs is in response to the changing environment. Because economy is dynamic, whether it is Sri Lankan economy or the global economy, it is very dynamic, and it does not remain the same for long. From time to time, the situation, conditions, and other things can change. But there is one thing that is important. Under each environment, society expects a better social welfare, and society have expectations. They want the central bank and other organizations to facilitate that so that they can take decisions and implement them with confidence according to their expectations. Therefore, we should be talking about what the changes in central banks and what are the issues at hand if a central bank is going to take some changes in their policies. Therefore, that also will be discussed. And I have to emphasize to all the students, if you want to be updated about this subject, and you should always refer to the news, maybe TV news and magazines, newspapers, whatever. You can find so many news items in a day that is relevant to central bank, that is relevant to your own economic activities, irrespective of whether you are a student or an investor or a producer or whatever. All those are important because why? As we said at the very beginning, we are always living with money. and money is linking us to all the sectors of the economy at different channels. Therefore, we should know whether this money is serving our requirements or not. If not, what the reasons are. Therefore, take this advice very seriously and try to keep updated about changes in the economy, the financial sector, not only the Sri Lankan economy, but also the global economy, because we are living in a global village. Everything is linked. Okay, now let's go to the next slide. Now this is the topic, especially we are going to start the topic, Introduction to Central Banking. I chose to discuss this with question and answer sessions, like question and answers, because it is easy and we feel comfortable, and also we tend to understand it better if we raise a question and understand the question and give some answer. Then we remember it better and understand it better. Okay, what is the question? First question that we have: why does a nation need an institution like central bank? Already in our initial discussion, we have answered this. Why do we need the central bank? This is a little bit, we have to discuss a little bit in detail. And if we ask the question, why we are holding now we saw earlier that central bank, the link between the central bank, us, and the rest of the world, the rest of the economic units in central bank Sri Lankan monetary system is the money. Then if to understand why we need an institution like central bank, we can ask the question why we need money in the first place. What is money? We know money we cannot consume directly. So it has no real value. Actually, not the real value, intrinsic value. It has no physical value. If you take even a 5,000 rupee note, its material value is very, very negligible. But still we are keeping it. Why? Because if we are self-sufficient, that means if everything that we need and want is available with us, we don't have to depend on anyone else. But the practical situation is we are not self-sufficient. We need large number of items, large number of goods and services to meet our requirement. Go to your kitchen and open the fridge. How many things are in the kitchen, in the fridge? Have you produced those things to store in the fridge? No. Including the fridge, and many items in the fridge are purchased from outside. When you say purchase from outside, how have we purchased them? We have purchased them by paying in cash. Then to buy those, since we don't have them, we have to buy them. Or we can say, a better word maybe, we have to exchange them with whatever we have. If you are going to exchange something in your house with a fridge, so there is no money involved. Sometimes you can say a heap of coconuts for a fridge. When I talk about this one, you may remember the barter system that you may have already studied under IABF, Survey of Financial Systems. Yes. In a monetary economy, money facilitates exchange of goods and services, so we need money to exchange. Why do we have to need exchange? Why do we have to exchange? Because we are not self-sufficient. Then as long as people are not self-sufficient, they have to exchange goods and services. And to facilitate that, there should be something like money. And each and every organization, every individual, they can't produce their own money. The society has created an institution like central bank with the due authority to produce, distribute, and manage money. That's why we need an institution like central bank. So let's look at the answer after this explanation. A broader answer would be that a nation needs such an institution to facilitate it achieving and sustaining prosperity. This is a little bit broader than what I explained. Achieving and sustaining prosperity. What is prosperity? Prosperity is a multi-dimensional concept. If we have the prosperity, let's take an individual. He can say, are you prosperous? He can say, no, I'm not. Can we say society is prosperous? They may say, not most probably. Then what is prosperity? It's kind of a feeling. What kind of a feeling? Feeling that whatever I need, whatever I wish to have, I am having there. And also, I'm pretty much sure that I can continue with that as long as I live. Not only that, sometimes parents like to always wish for their children also to have a similar situation. So the prosperity is a feeling that people tend to feel comfortable about what they are having, and also what they will be having in the future, not only them, even their children having. That is kind of a prosperity. Then we have to sustain it, now achieve it, and sustain it. So central bank is going to facilitate that. Then we have a basic question: how come that central bank help us to attain prosperity? We know the material well-being is a very important foundation for us to feel comfortable. Of course, there are so many other immaterial things also, but basically, if a person is poor in terms of having material well-being, then he has so many problems than people who are having them. Therefore, then for a society to have more goods and services, that society should engage in economic activities. When they engage in economic activities, they have to link with others. Consumers, producers are linked. Employers, employees are linked. Like that, there are many, many different links. If they can interfere, and if we can help each other, and in many different ways, only they can facilitate production of goods and services. Then when the more goods and services are produced, the society can have a higher standard of living. A higher standard of living can make them improve their quality of life, and also the way that they think, other things also can come. Then all these are possible if the economy is dynamic, economy is very active. Economy will be very active only if they can interact comfortably. That is facilitated by the presence of money. Then money, the institution behind money is central bank. Now we can understand then one of the fundamental requirements for a nation to have prosperity. So prosperity is something that we will never have, people say, because once you have achieved something, you want something more. But anyway, moving towards a better life, there should be more economic activities, there should be more dynamism in the economy. That is facilitated by the presence of money to facilitate exchange of goods and services. And the institution behind that is the central bank. That's why a nation needs an institution like central bank. Now, already I have discussed about what prosperity means, and also the answer is there. It's a multidimensional concept. And next, the third question: what is fundamental for achieving prosperity? This answer is sustainable growth. That also we have already answered. Then the fourth question is, how can the central bank foster sustainable growth? The answer is already we have discussed: facilitating economic activity by easing exchange of goods and services and maintaining macroeconomic stability. There we have to talk a little bit about macroeconomic stability. So other parts we have already answered. We know macroeconomy means taking the entire economy into account. Stability means you feel there is no much of volatility. Now, do we need this? When you say macroeconomic stability, consumer consumption is an economic activity, production is an economic activity, investment is an economic activity, we have to ask the question, whether we can feel comfortable about planning our consumption, executing it, and achieving expected results. Whether we take consumption, a consumer should feel, okay, I can plan the way that I wish, and also I can execute my plans. Finally, I can get my results, whatever the expected results. A consumer should feel like that, a producer should feel like that, and everybody should feel like that for them to engage in activities actively and with confidence. So if the economy is going to be highly volatile, now, for example, if we take the recent times with the COVID-19 pandemic, and we were not comfortable in moving even, and therefore the whole economy came to some kind of standstill situation. Not only Sri Lanka, the whole world. Now people have predicted that the global growth will be negative. And there will be many countries in Sri Lanka also. There are different views. It will be negative. Sometimes some arguments are there. No, it will be positive. It depends, because nobody can predict as of now. But what I'm trying to say is this: we lost macroeconomic stability during this pandemic period. And also, if you go back a little bit to the past, whole world was suffering from global financial crisis. And when there's a crisis, you can't expect stability. But people need macroeconomic stability to move comfortably. Therefore, central bank has to facilitate those activities by ensuring, we can't say ensuring, by working hard towards achieving, maintaining macroeconomic stability. Those topics, those are a little bit heavier topics, but we will discuss those things in very detail. This is now, as at now, we are just trying to get an idea about what we are going to discuss. Then the question number 5, how can the central bank ease exchange of goods and services? Answer, maintain monetary and financial system. Now, already we know, we discussed about monetary system. Central bank is the monetary authority. Central bank produces, distribute, and manage the money. Then another topic is added here, financial system. We have the monetary system and the financial system. What is the finance? What is the difference between money and finance? Monetary system is about production, distribution, and management of money. Finance is a little bit broader. Central bank can produce money, but people can use that money in different ways. Now, for example, if you take, you get your salary or money from your parents, if you are a student and not employed, then you can use that money to buy goods and services, and also you can use them, part of that at least, to save and to earn an interest. The same way, there can be another person who needs more money. That person also can go to a bank and borrow. Then a bank is using the money that produced by the central bank, linking with different type of economic agents, and using that money, mobilizing that money to different parties, collecting money in form of deposit and giving it to other economic agents in the form of loans or whatever. Then that topic also I am not going to discuss, because already by now you have studied about the financial system under survey of financial systems. In detail you have discussed, so we are not going to discuss about those things. Financial intermediaries, financial market, you should be familiar. But now in this point, you should know central bank is behind those as well. Then the other one is, let's read again, by maintaining. How can the central bank maintain macroeconomic stability? by maintaining economic and price stability and maintaining financial system stability along with timely economic and financial advice to the government. It's a little bit broader than what we discussed earlier. Here there are three different stabilities. Maintaining economic and price stability. They are not the same. Economic stability and price stability, and also maintaining financial system stability. I have put these the same way that the central bank has announced as its responsibilities in its website. Now, if somebody wants to discuss more in detail, these topics in detail, visit www.cbsl.lk. That website gives everything related to Central Bank of Sri Lanka. Actually, my main source for this lecture is also the central bank website. So you don't have to depend only on my lecture. You can broaden your knowledge and dig into more details by visiting central bank website. Okay, after discussing these questions and answers which are interlinked to each other, you may have seen even now. Let's go to some details of these things. I hope that by now you have an understanding about the nature of this course, what we are going to discuss under this course, and what are the main areas. Then with that sense of what it is going to be, we can move to the next one. Then you are going to answer the question, how can the central bank foster sustainable growth? It contains two parts. The answer to the question, how can the central bank foster sustainable growth, has two parts. Facilitating economic activities such as production, distribution, consumption, and investments. Already we have touched this part, but now we are going to the details. Now, there at the beginning we said facilitating economic activities. Now, activities are put in detail here: production, distribution, consumption, and investment. Those are main economic activities. Now, when we talk about when touch these concepts, you may remember households and firms. Households and firms. Because the main economic activity of a household is consumption. Main economic activity of a firm is production. Then these consumers or households and firms, through consumption and production, they are linked by the money. So central bank facilitate that. Then when you say economic activities, you should remember those things. Then macroeconomic stability, already we discussed. Promoting inclusive growth. Macroeconomic stability, we said the economic agents engaged in consumption, production, distribution, and investment should feel they can comfortably design their plans and also execute them. That is what macroeconomic stability is. Third one is promoting inclusive growth. That also we will touch separately. Promoting inclusive growth means, the term inclusive means you get everyone on board. Can there be exclusive growth as well? Of course, yes. One part of the economy can grow faster than other parts, and then that part can dominate. If you take Sri Lankan economy, and we have 9 provinces, and western provinces dominant in economic activities, and some other provinces are lagging behind. Then the facilities that the economic agents enjoy in western province are not same as the facilities available in other provinces. then it is not inclusive in the full in the whole sense of the word. Inclusive means there should be very close link within a province and also among provinces. Then that is inclusive growth. Now, if you take poor families, they are not linked to the formal economic activities, formal financial system. The main reason may be lack of understanding, lack of facilities. Then they are not included. Therefore, promoting inclusive growth means getting everyone on board to contribute to the progress of the economy. Remember, society is with all the people, and also the national objectives are for all the people, and also then everybody has to contribute. That's why we say promoting inclusive growth is important for economic prosperity. Then we are going to the details. How can the central bank facilitate economic activities? Now this is now already we have touched the main topics. Now we are going to the details. It involves providing monetary and financial system and following other important areas. Now relate this slide to the discussion that we already have completed. Making legal tender available in the form of currency, coins and notes, and preventing counterfeit currency in circulation. That is the main area. Making legal tender available. We said central bank is the authority, is the legal authority to produce currency note, and also it has to distribute. So that legal tender is in the form of currency, coins and notes. We have already seen the notes, coins also you are familiar. And there's another part added to that, preventing counterfeit currency in circulation. Let's leave it there and discuss those things later after we touch other parts. Production of currency notes and coins with security features. Security features also we will take a little bit later. Distribution of legal tender mainly through the banking channel. Promoting public awareness about security features. Work closely with law enforcement authorities to mitigate counterfeiting. Okay, let's take those things one by one. Production of currency notes and coins with security features. If you take a currency note, it is not just a piece of paper. It has so many different security features. Why do we need security features for this one? Because since this piece of paper has no intrinsic value, and also since it is accepted generally by each and every person in a society. You may remember at this point, one of the most important characteristics of money is general acceptance. If people accept these currency note that you saw at the very beginning, in exchange of goods and services, somebody can copy this one and make a counterfeit. Counterfeit means copy, illegal copy of this one, and cunningly, secretly exchange them with goods and services. But that has no legal authority. We know the only legal authority in Sri Lanka to produce currency notes and coins is the Central Bank of Sri Lanka. If somebody is doing the same function, it is without legal backing, so it is a counterfeit activity. And then to make it difficult for someone to copy, there are security features embedded in currency notes. Some are seen, some are not seen. Because if somebody can see all the security features, easily they can replicate them and produce a note that is very much closer to the actual currency note. Therefore, central bank has security features. Central bank embed security features in different forms to prevent counterfeiting efforts. Okay, that is one. Then distribution of legal tender mainly through the banking channel. Central bank does not does not directly give money to the legal tender to the economic agents. This through the banking system, central bank uses this. So central bank has to use this banking channel. Then promote public awareness about security features. This is very important. How many times do you check a currency note? Or we can say, do you have a habit of checking currency notes when they come to your hands, whether they are genuine or not? Because sometimes, because of the availability of the technology and printing technology is very, very important. Maybe this very, very developed, highly developed, then people can print currency notes for them to look like exact currency notes. But if you are not aware, of the security features embedded in them, and also do not have a habit of checking them frequently, easily, those people can cheat us by exchanging counterfeit notes with us. Therefore, central bank has the responsibility of promoting public awareness about the security features. These are the features like Central Bank of Sri Lanka has a currency department. Currency department has a special unit that always continuously conduct awareness programs, workshops to business people, general public, sometimes school children, about the security features of currency notes so that they can easily distinguish between genuine notes and counterfeits. Then central bank can build confidence in exchange in currency notes when people make exchanges in goods and services. Now imagine that if you are very doubtful about the currency notes, whether they are genuine or not, it will be a hassle. Sometimes you can abandon even using currency notes. Therefore, for the central bank to ensure that people comfortably use these currency notes and coins, central bank has to ensure there are no counterfeits in circulation. Then the last one, work closely with law enforcement authorities to mitigate counterfeiting. The Criminal Investigation Department of Sri Lanka, that is CID, has a special unit that is counterfeiting crime unit. Here I have to mention that counterfeiting a currency note is a criminal act. They are dealt with criminal law, not the civil law, criminal law. So the legal part is handled by the CID department, CID, that is Crime Investigation Department, CID. So central bank, currency department of the central bank has very close relationship with the CID, that unit of CID, to mitigate counterfeiting, taking legal actions and all those things. Then let's go to the other main one in this slide, facilitating the establishment and operations on banking and financial institutions. As we said earlier, central bank produces and distribute currency notes to facilitate economic activities of different types. Already we have touched them, like consumption, production, investment, and all those. Then for that, the main channel is the banking and financial system. The central bank has to ensure that they are established and operate efficiently. So what are the main areas under that? Issue licenses to qualified institutions to engage in financial business. If you have money and want to start a banking activity or even a finance company activity, you cannot do it by the authority giving you the license to do it, because you should be holding a license to operate. Otherwise, engaging in banking and finance activities without the permission of the central bank is illegal. The central bank is the license issuing authority for banks and financial institutions. There are many requirements for some of this. Anyone to complete, central bank take all those things, assess, and after that only license are issued. So central bank is behind the establishment and operations of banking and financial institutions. Then after issuing licenses, central bank is not going to allow those institutions to work the way that they wish. There are a set of guidelines again. Now, if you take bank, there's Banking Act. If you take finance company, there's a Financial Institution Act, Finance Business Act. So those institutions have to work according to the provisions of those acts. It is the central bank who monitors to ensure that those institutions are functioning according to the legal provisions in those acts. The third one is provide facilities to manage their short-term liquidity. What is liquidity? Liquidity has many meanings. Basically, liquidity means if an institution or person has the capacity to execute any transaction, that means it has liquidity. Now, sometimes you may have situations, you need money, but you don't have it. That is, you don't have liquidity. But this is very, very important for financial institutions, because whether you take a bank or finance company, they use others' money. We deposit our money with the bank lend that to the borrowers. But we have the right, as depositors, we have the right to go to the bank and withdraw our money anytime we wish. Sometimes, if the banks have not managed their financial resources properly, they may not have sufficient cash to meet the needs of the customers. Therefore, in such situations, if there is a situation like that, of course, there are so many provisions for that. Central bank can provide liquidity, short-term liquidity. The central bank is not going to provide long-term liquidity, short-term liquidity, maybe days or 1 day or 2 days or maybe 7 days, like very short-term. Central bank can provide. When we discuss those things in detail, you may understand them better. Then the third one, facilitating payments and settlements. We know, we said, we exchange goods and services with money. But when it comes to financial institutions, there can be two customers having linked to two different financial institutions. And there should be, for a particular transaction to be complete, there should be settlements, payments and settlements at all levels. For example, if you go to a supermarket, you may buy with your credit card or a debit card. Then that supermarket gets the money directly from you. It is not the money, actually, they get the control over the liquidity. So their account will be credited and your account will be debited. And supermarket may have a different bank. As the supermarket can be a customer of a different bank than your own bank. The same way that the accounts are settled between you and the supermarket, there should be accounts settled between your bank and bank of the supermarket. So that has to be facilitated, because nobody is going to do it. They can now, if you pay with cash, there's no problem, because you have the cash with you. You can directly pay with cash. The settlement will be over. But in a complex, sophisticated financial environment, there can be many transactions which are taking place without cash. Can be cards, checks, whatever. Then all those are instruments, payment instruments, then cash. Payment with cash, that is legal tender, shorten the process. So at the point of payment, transaction is over. But with other instruments, the payment and settlement should be handled. That is also facilitated by the central bank. At now, again, I have to mention, by now you may have studied under IABF syllabus, especially under Survey of Financial Systems, about Lanka Clear, which is the institution established by the central bank and also with the participation of commercial banks to facilitate the exchange and payment and settlements. Central bank is behind this, so central bank have to do it. And the other one is provide short-term liquidity to authorized financial institutions. This one we will discuss a little bit later because these authorized financial institutions we will discuss later. There are also central bank is providing facilities for the organization which are involved in this payment and settlements. If they have short-term liquidity problems, central bank is going to resolve them. Okay, after this, let's go to the other topic, maintaining macroeconomic stability. If we go back to our original one, we said, how can the central bank facilitate sustainable growth? That is central bank and sustainable growth. There we identified three different main areas. One was facilitating economic activities such as production, distribution, consumption, and investment. That part we discussed. And then maintaining macroeconomic stability. That also we discussed. Now we are going to details of maintaining macroeconomic stability. Earlier we simply said if the consumers and producers can feel, investors can feel that the environment is stable for them to plan and execute their plan, that is what macroeconomic stability is. But here we have them in detail. Okay, let's take them separate this one by one. Maintaining economic stability. What are the subtopics under that? Continuous monitoring and assessment of the performance of the economy. Central Bank of Sri Lanka, because this discussion is based on the Central Bank of Sri Lanka. As we said at the very beginning, we said we had to be familiar with Central Bank of Sri Lanka than any other central bank in the world, because that is the most influential one for our life. Then if we take Central Bank of Sri Lanka and take this first item, continuous monitoring and assessment of the performance of the economy, Central Bank has many departments. Central Bank of Sri Lanka has many departments doing this. The main department is Economic Research Department. It is continuously collecting data, analyzing data, and also producing analytical reports, providing them to the general public, the government, and other relevant institutions. Continuous monitoring is very important. Assessment is also important to understand what is going on in the economy, what has been the trends in the past, what is likely to happen in the future. If that what is likely to happen is a comfortable one, not to worry, but if some uncomfortable developments are coming on, then how to address those things. For all those things, there should be continuous monitoring and assessment of the performance of the economy. That is one way central bank helps maintain economic stability. The other one, provide professional guidance to the government on economic management. We know government is a very big player in the economy. From time to time, the parliament can take decisions that can affect the economy in different ways. Then sometimes the government may not have the professional competency to identify the developments and design policies accordingly. Therefore, central bank always provide professional guidance. If we take, okay, if the central bank is going to monitor and assess the economy, central bank can easily advise the government on economic management. And the third one is support the government to mitigate negative impact on economic shocks. From time to time, the economy can experience shocks. They can emanate either from within the economy or from outside the economy. Now, recently, this COVID-19 pandemic is a shock. Then so many short, that small, medium, and large-scale businesses have been affected. Then central bank took actions. Of course, it was in coordination with the government, took actions to offer a debt moratorium. because when the economic activities are affected, all the economic organizations, whether they are big or small, they affect their cash flow management. When the cash flow is not there, the same way it was, then they will fail. They can fail to meet their debt obligations to banks. If people have borrowed, if households have borrowed, and the business organizations have borrowed, they find it difficult to maintain their payment regularly. Therefore, in such a situation, considering that was a shock. That was a shock to the economy. Central bank took actions immediately to introduce a debt moratorium. And also, since the investment funds were not available, central bank also took measures to reduce the interest rates and direct commercial banks and other institutions to identify the priority areas and lend accordingly. So that is kind of a support that central bank has given to mitigate the negative impact of shocks. The other one is give due consideration to economic conditions when designing and conducting the monetary policy. Monetary policy we will discuss in detail. Central bank can't take decisions on the monetary policy without looking at what is going on in the economy. Therefore, due consideration should be given. Due consideration should be given in conducting the monetary policy. Monetary policy is a very, very important and interesting area that we will be discussing separately, exclusively under a special topic. Then third one is disseminate information on economy for general public and for informed decision making. If you visit central bank website, you can see so many different publications of the central bank. And press releases are there on monthly basis on the economy, monetary policy. In addition to those press releases, say that one of the main important publication of the central bank is Central Bank Annual Report. That is a comprehensive report which analyzes the economy completely in all sectors. In addition to that, central bank also publishes quarterly reports and financial sector reports. There are so many. The purpose of doing that is to make the public aware about what is going on, so that they can, when they take decisions, they can take decisions with better understanding of the economy. Central bank has a separate department called Information Department. The main role of that department is to make public aware of what is happening in the economy. Then let's go to the other stability, that is maintain price stability. Price stability is something that we have to understand clearly, because if you go by the term itself, price stability, maintain the same price. Now, if there was a price in 2019, if we maintain the same price in 2020 also, so in the sense of the word, price stability is there. We know in macroeconomy we are dealing not only with one price, they are dealing with many prices. Those are captured by, again, I have to emphasize, you are required to know that under economics. Already you have studied under your AIB, Principles of Economics. You may have studied about price indices, because price indices is about combining all the relevant prices together and reflecting the price of a basket of goods and services, so that it has a common price. It is actually index. Now, as of now, we have the National Price Index, Colombo Consumer Price Index, National Price Index, NCPI. Those are the indicators of the price movements of the selected baskets of goods and services. Then if we take that sense, if we maintain the same price index value, assume that the index value was 100 in 2019. If we maintain in 2020 also the same value, price index is 100, then we can say price stability. But under this macroeconomic management, price Stability does not mean maintaining the same index. Now, if we have the same index value, so there is no inflation during the period. Inflation is zero. But here, under macroeconomic stability, price stability does not mean zero inflation. Let's read what is given. Conduct monetary policy to ensure low and stable rate of inflation. There is some inflation is there. That means prices are not stable. Prices are rising because inflation is about continuous increase in prices. So when there is inflation, prices are rising. But here the important thing is it says low and stable rate of inflation. There can be a situation where the prices are rising, but they are rising at a stable rate. For example, we can say inflation in 2019, let's say it was 2,000 to 2%. And in 2020 also, the inflation rate is 2%. So the inflation is there, but the rate is stable. And also it is not 10-15%. That's why they have put low. Actually, it should be L, not LAW, it should be LOW. Low, because LA means it's a printing mistake from my side. It should be low, LOW. I'll make the correction later on. Low and stable inflation rate. And what rate? That does not disturb economic agents to plan their economic activities as per their expectations and implement them with confidence. Now, for example, suppose that the prices are rising at a rate of 2%. And also we can take prices are rising at a rate of 20%. Which one makes you feel more comfortable? 20% is a very high rate of inflation that creates so many economic disturbances. But 2% is not that much because we can easily embed them into our cash flow projections. And also somebody can feel that why should there be inflation in the first place? Because inflation stimulate economic agents. The same price remains for a long period, the economic agents start feeling a stagnant economic environment. Stagnating feeling is not good. Then people become less enthusiastic. If the prices are rising but not at a very high rate, people will always be enthusiastic. That's why we have to maintain some inflation, but it should not be that high to disturb the economic plans. Therefore, central bank's responsibility is to maintain low and stable rate of inflation in a way that it does not interfere economic plans of the economic agents and the execution of them. To do that, what central bank does is conduct monetary policy. How the central bank conduct monetary policy, we will discuss in detail at a later discussion. Then the third one, last one, is maintaining financial system stability. Imagine of you a feeling that your bank will be having financial problems. What will you do? If you feel that, suppose that you have deposited your money in a bank or finance company, Now these days we have very good experience, the finance. Now they have problems with the finance, and the finance was not maintained, was not managed properly, and depositors found it difficult to withdraw their money. Now the government has taken, central bank with the advice, with the discussion of the government, has taken over the control of the finance company. Central bank is going to ensure that the depositors, especially the small depositors, will get their money back. The bigger investors also, because depositors also will get money to some extent at the beginning, but later on they are going to do it. Now, if you take this very incidents that these days we experience, you can see if a finance company or a bank is not financially sound, people always feel uncomfortable in dealing with them. Then at the very point that you feel your bank is not stable, your finance company is not stable, the first thing you will do is you will go and withdraw your money. If everybody is going to do that, can even a stable bank or financial institution survive? No, you can't. because they have, once the banks get the deposits, they invest them in the form of lending. Then immediately when everybody is coming to the bank and asking for the monies, the bank cannot meet that requirement, then it will find it difficult to meet all the requirements. Then the people will panic. Therefore, central bank has to monitor whether commercial banks, specialized banks, and finance companies, mainly financial institutions, banking and financial institutions, are performing their activities according to the rules and regulations, where they have proper cash flow management, proper risk management. To know that, central bank has to monitor and supervise those financial institutions. Central bank does that. And also, central bank has the authority to regulate them. If we take commercial banks and other banks, Banking Act empowers central bank to take regulatory measures to control their activities. Finance Companies Act again empowers central bank to handle those institutions. So central bank, while monitoring and supervising, take regulatory measures if it deems necessary to do it. Then sometimes, due to unforeseen or due to shock situations, finance companies, financial institutions, and banks can encounter certain problems. In such situations, central bank can always help them with financial stress. When they have financial stress to resolve them, central bank can help. Why? Because by now you must have felt the economy is running with monetary and financial system. If the monetary and financial system comes to a standstill situation, what will happen? That was a very good example during this COVID-19 pandemic. People could not go to banks. People could not go to ATM machine. Some people may have faced the problem of not having money. And maybe the delivery vans may be going by your house. But if you don't have, you may have a credit card, you may have a debit card, you may have money in the bank, but those small sellers are not going to accept your cards. They don't have the facility to provide, the sell goods and services by accepting your card. Then financial system should be there. Then we can understand the importance of maintaining this financial system stability also. Let's go to the other one, promoting inclusive growth. What are the main areas under that? Promote financial inclusion, financial literacy. Above we have put promoting inclusive growth. That is, when it comes to economic activities, we are going to get everyone on board. To do that, the first one is promote financial inclusion and financial literacy. Financial inclusion means if there are segments in the society who are not connected to the banking sector, or we can say formal financial sector, you take actions to make them link. But their main reason for them not to link may be two things. One thing, facilities may not be available in close proximity. Even though the facilities are there, people may not be familiar with them. Then central bank has special arrangements to educate people about the importance of connecting to the formal financial system and also encouraging availability of those systems in all areas of the country. And you know that if you don't borrow from a bank or finance company or whatever, you have to borrow from a money lender. Money lenders' conditions are very high. If you borrow from a money lender, interest rate may be very high, and also the flexibility you have also may not be that much. But if you borrow from a bank or something, you can benefit in many different ways. So central banks educate in that regard people about the importance of connecting to the financial institutions, formal financial sector, and also making them available for people to connect. Then the other one is implement government and foreign funded programs through participating financial institutions. Sometimes the government and international organizations like World Bank, Asia Development Bank, they have special programs to support poor segment of the society to mitigate or reduce poverty, alleviate poverty. Then there should be a mechanism to channel those funds to those needy segment of the society. Central bank facilitate that as well. Thereby, if those institutions have, if those poor segment of the society have no funds, they can provide seed funds. The seed fund means funds to start their businesses. Not only that, not only the funds, they also can provide the guidance about how to do it, marketing facilities, all those things are also supported by the Central Bank of Sri Lanka in case of Sri Lanka. And the other one is support programs to achieve Millennium Development Goals. Millennium Development Goals are multiple, and that is also leading to alleviation of poverty. Central Bank support in that area as well. Now, let me summarize. Let me summarize what they did up to now. This was just the introduction to about central banking, and we, as we said, we will go to the details of those topics later. And after this, I hope that after the end of this lecture, you have may not be 100%, but to a certain extent, you have an idea about what central bank is about. And also what are the main functions of a central bank, and what is the importance of central bank for a society, for it to achieve its objective. The main objective, as we said, is to have economic prosperity. Economic prosperity needs continuous engagement of people in the economic activities, and those are possible only if the exchange of goods and services are facilitated, and the banking sector is functioning properly. Those are the important areas, and read these slides with the notes that we have provided. And in the next lecture, we will discuss other topics that we have put in our slides. Thank you very much.